Hello and welcome to the Capital Spreads Weekly Update. Today is Friday the 8th of October 2010 and broadly it's been a positive week for the equity markets. We're up around just over 1% for the FTSE on the week, and we even tested 5,700 earlier on Wednesday. We did retrace from there, but it definitely shows that there seems to be still a very bullish appetite out there. Investors are willing to still hold on and own equities, and as I say, the 5,700 mark was touched after a very strong rally on Wednesday, but we're just back from there at the moment. And the week has been interesting. It's been mixed. We started off with some good PMI numbers, and so that gave us a little bit of impetus, and it has improved sentiment somewhat. But really the main driver behind the rally has been very much the fact that quantitative easing is back on the cards, and it would seem that certainly the bond market is very much fully pricing in further QE from the US. Now that caused the rally on Wednesday. Since then we've actually just fallen back from the highs a little bit after interest rate decisions from the European Central Bank and the Bank of England, where obviously there was no further QE announced. So that caused us just to see a little bit of profit taking. And of course today we've just seen the non-farm payroll figures, which are coming a lot worse than expected. So it's caused quite a bit of volatility in today's trade, and it would seem that the bad figure did initially cause a little bit of a sell-off, but on the other hand, the bad figure is good in terms of QE, and QE will benefit the equity market if we do get confirmation of that. So that's been the week so far. The current situation is that the markets were a little weaker earlier. They're just recovering off their lows. FTSE's around 56.50, the Dow around 10,970, and in the currencies, the euro and cable again have done very well against the dollar. Any mention of any further quantitative easing is always going to be dollar negative. So earlier in the week we saw the euro touch 1.4, and in cable we saw 1.6. But at the moment, just below those levels, obviously key psychological levels for those cross rates, euro's around 139.30 and cable around 159.20. The recent profit taking has affected gold, which has been very, very strong again this week, but yesterday suffered a very sharp fall, very sharp bit of profit taking. Currently gold is around 1340, but well and truly above the 1300 level. So we've seen the markets test resistance. In the case of the FTSE, we've gone beyond the recent resistance levels. So it seems certainly there's very much a bullish slant to equity markets at the moment. Resistance for the FTSE now at 57.20, then beyond there 5800 to 58.45. That's the year high, so there will certainly be a bit of resistance around that level if we get there. Support around 5600, and then below there probably not much until around 55.25, and then below there another bit of a jump to around 54.10 for the support in the FTSE. How are clients playing the markets at the moment? Well, they continue to sell into this strength, and they've been caught out a little bit, taking profits wherever they've been able to if there's been a slight decline. But definitely they're very much short the FTSE, short the German DAX, and short US indices. On the FX markets, again, they continue to buck the trend. They're very much short of the euro dollar, and that certainly seems to be the case of cable as well. But in the case of gold, as I highlighted last week, clients have started to sell positions in gold, but now since the correction of yesterday they're actually long gold. So certainly the clients seem to think that this little correction is a buying opportunity. So next week we focus, the focus will be on obviously further economic data, but we're a bit thin on economic data, but highlights will most certainly be FOMC minutes on Tuesday. Then we get unemployment data from the UK on Wednesday, and then we finish off with US retail sales on Friday. So a little bit of economic data to focus on for next week. So the theme this week, having already touched on it, definitely the renewed evidence that quantitative easing is very much back on the cards for the Federal Reserve. That has been pretty much completely priced into the bond market. The dollar continues to depreciate in value as further evidence of QE mounts. It'll be interesting to see that when this inevitable QE does commence again, how the markets will react. Will there be a case of buy the rumour, sell the fact? We'll have to wait and see, but certainly the theme of this week is further QE, and will that cause the bull market to continue? That's it for this week. As ever, do give us feedback, media@capitalspreads.com.